Hello everyone and welcome to my morning report analysis videos on Wednesday the 29th of August with me, Richard Perry, market analyst at Hantec Markets. We've got a fairly sort of consolidating look to the markets. There's been a slight degree of a dollar rebound, nothing too significant. And that's broadly on euro weakness really. Sort of the dollar moves across the majors are just fairly muted, other than a little bit of Aussie underperformance and a little bit of Euro underperformance. Now, Euro underperformance is coming on the back of suggestions that Italy is sort of trying to put a bit of pressure on the ECB to basically fund it. So that's not great for the Euro, and the Aussie is under a little bit of pressure as the Chinese yuan has started to weaken a touch as well. So that's just pulled those two currencies lower today. Basically a consolidation move that we're seeing on equity markets. You saw that consolidation on Wall Street last night, ticking very, very mildly higher on both S&P and Dow. Futures doing little more either, and Asian markets as well, ticking a very slight amount higher, nothing too significant. So we're very much muted in terms of our market direction today, and what we're seeing is, as I said, the dollar index just pulling slightly higher, but the trade discussions, let's call them trade discussions between the US and Mexico and Canada, sort of taking a little bit of focus, I think, and the agreement or apparent agreement that we've got between the US and Mexico, and depending on whether Canada joins into that agreement, that could be an impact on risk appetite, because if Canada comes into the agreement, then that could help to stabilise any political risk around Canada, for example, so that could affect the loonie. But also, how does that play into other trade negotiations or trade disputes that the US has got around the world? So it's an interesting one that has resulted in Treasury yields ticking slightly higher yesterday, although that certainly was helped by the consumer confidence in the States coming in at record levels yesterday. Just yields are slightly giving up some of those moves from yesterday, but yeah, sort of broad consolidation that we're seeing today. Now, in terms of what we've got to look forward to today, not a great deal European morning. We've got in the afternoon the second reading of US GDP. First print of GDP came in really strongly, and at 4.1%. So it's expected that. Sorry, that's not what you want. That's what you want. Expected to come in a very slight amount of a downward revision, down to 4.0 on the second reading of GDP. Pending home sales expected to rise. Oh, now 0.3% on at 3 o'clock, and then the EIA inventories not doing a great deal. Little bit of an inventory drawdown there on crude stocks. Little bit of a build on distillates and nothing on gasoline. So that takes me to my chart today, which is dollar Swiss. Now this is interesting because the Swissy has been performing pretty well actually against the dollar throughout. Well, since that dollar strengthening of April, the Swissy has actually been outperforming the dollar pretty much, or at least holding its own, and now outperforming, because we've seen a breakdown below 97.85 yesterday, decisive breakdown, and that completed this, I suppose you could argue, range breakdown, and implies actually around about a move sort of 280 pips towards 95 big figure, which is a bit of a pivot March-April time. But more importantly, I think this sort of suggests that the market is rolled over, and it suggests more of a safe haven move of the Swissy being preferred. Now, we have seen the yen performing better against the dollar during that time as well, so this is an interesting move that we're seeing. We need to keep an eye on. 97.85 is the resistance overhead now, but between there and this old floor around 98.60 is now a sort of a sell zone near time on a rebound, because you've got that that old floor became resistance. Let's zoom in a bit better here. Old floor here from the June-July lows became resistance on the little rebound in August, and having now broken below 97.85, that also becomes a basis of resistance as well. So this is a little sell zone now you've got between 97.85 98.50 area. Also around the 23.6% fib level, interestingly enough. So it looks like the market is going to be testing that 38.2% fib level. 50% fib is 96.25, and that is again the next real support area that comes in. Not a great deal of support between having broken down and that 96 sort of 50 area. So interesting that we're seeing this move taking on as the momentum indicators deteriorate. MACD lines, look at those falling away, lowest since March, and deteriorating on the stochastics and RSI as well. So any sort of, I think, near-term technical rebound, I think, is likely to be seen as a chance to sell. 50 to 60 on the hourly RSI seems to be limiting, and we've had a little unwind towards 50 already, but maybe 60 could be an area, and that would probably coincide with 97.85. So I think a little selling into strength could be seen on dollar Swissy. So I wish you good luck in your trading today, and I'll speak to you later.